Sriram Subramaniam, MD and founder of InGovern. I'm also speaking with Digant Haria, founder at Green Edge Wealth. Welcome to both of you, and thank you so much for your time with us here on NDTV Profit. Digant, I'm going to start with you first on what you make of the entire situation of what's happening with IndusInd Bank. Now, what the management is saying is that it's not such a big deal. They're trying to underplay it. They're saying it's a very small part of their entire derivatives portfolio. They're the ones who found it. They're doing an internal audit. And now an external audit is asked for as well. So nothing to see here. Move on. Do you agree with that?
Morning, Tamanna. Very difficult to agree that, it's a small issue. And then see, it's a 7-year pattern, like in 2018, they started with problems in their wholesale portfolio. Then problems came in their deposit. Then problems came in their microfinance franchise, then personal loans, then the MD CEO RBI, now this treasury losses. So it's all, just pointing to one thing, that it's a bank which is not very, very tightly run. And, bank is a complex business. If you don't have very, very tight systems and controls, such things keep happening. Now, 7 years, 7 different events. So there's hardly, a reason to believe that this is a one-off and, it will just not matter. I think, this is where investors lose trust, and one-time price to book always tells you that okay, we do not trust you enough. So the stock has gone below that one-time price to book mark as well.
Okay. So I'll come back to it. So yeah, one-time price to book is where the stock is gone. It's a reflection of the lack of trust. But is that lack of trust fair? Sriram Subramaniam, when you're looking at the facts as they are, now there could be 2 points here, right? There could be a governance lapse. They could be knowingly not having figured out what or the size and magnitude of the problem is. Which one does it seem in your view?
This specific instance seems to be a rogue trade or a trade gone wrong. Something in the books, in the treasury operations, they couldn't risk manage it properly. Probably reporting was very late. Something went wrong. Especially the RBI norms seems to have changed since April 1st, 2024. So from that perspective, their recognition, this could be a long duration trade, and so they could not recognize it earlier. So while it is, this is an impact, as Digant said, banking is a business of trust. So counterparties could be hesitant to take trades with them. Clients could be hesitant to deal with IndusInd Bank going forward. And that is the reason why there is a huge impact. So I think it is not the past instance where they have already provisioned or they have said that this is a 2,000 crore impact. But the impact on the going forward business, whether clients will trade with them, whether counterparties will trade with them, whether there's confidence in the numbers and the risk management that the bank has, I think those are the more important points.
Okay, Mr. Subramaniam, good morning, Neeraj here. Is this bordering on a governance issue, or is this an oversight and a lapse? Because both are bad, just that a governance issue is terrible, right? So do you foresee this to be a governance issue or not really?
As of now, it doesn't seem to be. As Digant said, it seems to be something where risk management is gone. The control systems in the bank don't seem to be tight enough. Governance is something where the management knowingly is hiding things. That doesn't seem to be the case. The moment they seem to have recognized it or found it out, they seem to have highlighted it to the board and then come forward and disclosed it to the markets. So I hope it's not a governance issue. I mean, we've at all, at least from the news that is out there, from what the bank has put out, it's not. It seems to be just a trade that's gone wrong, not a governance issue. More of risk management, more of bad trades, etc.
Now, Digant, please come in and tell us, how would you look at it from a valuation perspective? 0.9 book yesterday. Now, this lapse brings down the book value, but the price correction kind of takes care of that. FY26, if I were to look 1 year forward, it's probably trading anywhere, I mean, and it depends on whoever's guess and estimates, but anywhere between 0.7 to 0.9 price to book. Does a private sector bank, with its share of issues, of course, trading at that multiple become attractive, or does the street say that let it remain attractive for a while? There are other banks which are maybe not as cheap, but certainly cheap relative to what they have traded in the past, and let me go there.
So morning, Neeraj. It will always be the latter because see, banks is a leveraged business. It's 8 times leverage. Your debt to equities are very high. So whenever such problems happen, the trust is broken. For the trust to rebuild, it takes a long time. Those who have positions who thought, okay, this bank just has temporary problems of say, a microfinance portfolio which is not performing well, or a diamond portfolio which is not performing well. These are business issues, but now what has happened is like a process issue. So then what do you base your investment argument on? If you are very confident on the process, then you will say, okay, business issues, the cycle issues in microfinance diamonds, they will go away after some time. But we are not at that stage. So I don't think the trust is coming back. Point 0.7, 0.8 times, Neeraj, you will find tons of banks. Ratnakar Bank is below that. DCB is below that. South Indian is, Karnataka is. IndusInd was once upon a time a better franchise, but now they have to prove that they are better. A lot of hard work. I think it's better to look for greener pastures. It'll be too premature because next 2 quarters you will see microfinance and diamond portfolios of this bank also giving a lot of pain.
So what are those greener pastures, Digant? Two-part question. One is, what are those greener pastures? And secondly, what is, for example, going to be the turning point for IndusInd Bank? Could it be if there is a change in leadership? That seems to be the next logical step.
Yes, Tamanna, I think, IndusInd, I think it's a hard work. Nothing can turn around in 2 days. The new leadership comes, they identify what were the loose ends of the processes, they tighten it up. So it's a long battle. I think it's best to let the bank fight their own battle. So I think turning point will still be quite away, maybe 2 quarters away when microfinance pain is off, diamond pain is out and off, and these processes get tightened. So it's a good 2 quarters away. Till then, I think, the greener pastures, as, you asked me, I think something like an Axis Bank in the private bank trading at like 30-35% discount to ICICI, such a discount is probably not warranted. So maybe Axis Bank is, if so to say, a greener pasture. Maybe something like an SBI, the largest bank in PSU. They are growing at 12%, faster than an HDFC, faster than an Axis Bank. So maybe that could be one greener pasture. Then there's insurance sector, which is also probably turning around. So yeah, there are a lot of greener pastures, but I think this is the battle zone where we can think of after 6 months, not immediately.
Just one point, Sriram. Yes, this is now something that the company itself has come and told investors. RBI is obviously in the loop. We know that from the company itself. But is there need for a further probe on the simple point that if there was an internal audit going on for several months, why is this being revealed to investors only now?
I would think that the bank took its time to report to the board, and the board subsequently met yesterday and out of turn, or it was not a regular board meeting, and they seem to have disclosed it to post that earlier. But obviously, they would have reported it to RBI. That's the process. And I would think the moment they got to know, they would have reported it. If they have not done it, that becomes like a governance issue. I would think at least let me give some credence to the management saying that they could have done it at the earliest possible. They have done it at the earliest possible moment.
Got it. Well, this is a fruitful conversation in more ways than one. And gentlemen, both of you, thank you so much for taking the time out and being with us and giving us your sense of what this is. And nobody's quite excited. And I think the way Digant put it as well, that there are countless other opportunities available for those valuations and maybe at the current point of time, better managed banks. So lots of options for investors, and which is why IndusInd being shunned today, down 20% and staying on a lower circuit, rightly so. As a stock, this should ideally have met this reaction, and it has. Let's see if there is a change later on.